Watson. This is the Prospector Podcast, and I'm joined for the very first podcast of the new year by friend, colleague, and longtime contributor Chris Temple of the National Investor. Happy New Year, Chris.
And Happy New Year to you as well, Mike.
Yeah, we've turned the page in both of our countries, and you guys have a clear change of government coming. We've got one that's as muddied can be, but we're going to talk about you and your government and this particular cast. But before we get into that, we're going to go back in the Wayback Machine to some of your misspent youth. When you were young and foolish and worked for policy companies that would lobby the federal government on behalf of legislation and constructive ideas and laws.
Yeah, my entire life, my entire adult life, Mike, I've been involved in economics, the markets and whatnot, and along the way, started to develop some very strong core views on how things should be, certainly not conventional ones by modern standards, but on banking, on trade, on how economic policy at every level should benefit people first, and profits second. Because if the people are taken care of, profits will follow, and you'd have a nice functioning society. The trouble is, like government generally, banking also runs from the top down, and this policy seems always geared toward the influential, the rich, the politicians, all of their fellow travelers. And so from time to time over the years on things like monetary policy and trade and related issues, I've done lobbying in Washington, working with various organizations, mostly, again, on banking and trade and monetary issues, things like that. Haven't done it in a while, but I rolled up my sleeves again in the recent past over one particular initiative that we'll talk about today, which quite honestly is going to be the difference between whether Trump 2.0 is successful or not when it comes to economic issues, our nation's, and really this is going to go for Canada as well, our ability to provide more of our own needs in-house, for energy, for critical materials, for the science, and for the technology to refine and make use of those things. The world is fragmenting, as you and I have spoken many times, when it comes to this World War III that is already underway over commodities. And the president faces a tall order of putting the right people and policies, and most important in this context, funding mechanisms in place to make all of this work in a meaningful way soon. He will not be able to do that successfully if he relies on the existing Washington apparatus and the existing banking framework. I've said many times recently, including our last conversation, that if you want to look at every possible subject in 2025 and really beyond, and try and figure out what asset classes are most actionable to invest in, what the odds of the broad stock market are going to be, what the odds of the economy, the US dollar, interest rates, everything are, just do the math. And Donald Trump is taking office in another 2 weeks, or just under 2 weeks, with the math overwhelmingly against him when it comes to the markets, when it comes to the level of interest rates, when it comes to the existing 36.2 trillion now of national debt and climbing at the rate recently of 2.5 trillion more in this fiscal year. And you cannot possibly fit into this whole equation, and certainly on top of how much he already wants to add to the deficit with tax and related policies. You're not going to move the needle at the federal government level doing anything for our infrastructure, our power grid, for high-speed rail, for our extractive industries, any of this stuff, if you don't think and act outside the box and outside of the federal budget process. And there is a mechanism where you could do that.
Yeah, let's talk about that, because right now, one of the things that we can see both parties actually agree on it, that there is an infrastructure deficit in the United States. Trump's first term Every week was going to be infrastructure week. Didn't work particularly well. Nothing really got funded. Nothing kind of really moved forward. Then you had the Biden administration come in, Democrats, and they were going to build back better. And they managed to get money for projects, but I didn't see a whole lot of projects actually being built or infrastructure other than the odd bridge that had already collapsed getting rebuilt, really being moved forward. So, as much as they like to talk a long game, nothing seems to happen.
Well, no, look, in the first place, the worst and least efficient way to finance the things that need to be done for our country, for infrastructure, for communications, for broadband in rural areas, for EV charging stations, for all of this stuff to reinvigorate our domestic mining industries and enrich uranium and be able to build batteries with homegrown technology and workers, et cetera, et cetera, et cetera. The worst way is to do it at the federal level by putting the decision making in the hands of agencies that just throw money around and there's no accountability. I mean, one of the infamous examples from the administration that's mercifully about to leave here in the US was that on this whole lark of EV charging stations alone, coast to coast, 500,000 charging stations were promised, $7.5 billion was appropriated, seven charging stations were built. The whole broadband initiative, billions of dollars there to bring broadband to rural areas don't have it. Virtually nothing done there. You need to have a mechanism that has some incentive for profit, some accountability, and is in the hands when it comes to decisions and implementation of people, A, at the local level, and B, who actually know what they're doing. None of that, of course, applies to the federal government bureaucrats. So you've got to find a way to do these kind of things that are off the books of the federal budget. So you're not adding directly to the federal deficit as so much of Biden's game plan did, with Build Back Better in the IRA and stuff like that. And I'm not criticizing all of it, nor do I think, contrary to some of his threats, that President Trump should repeal all of this stuff. There were good elements that we can already see were good of this, but just the whole mindset and apparatus needs to change. And this is why in the recent past, I've rolled up my sleeves again, and I guess you can say I've kind of been deputized by the group called the Coalition for National Infrastructure Bank to carry water for that idea, talk to different members of Congress, especially on the Republican side, where incredibly there has been less uptake of this in the last few sessions of Congress than about. I think we ended the last Congress before of course, the new one was just sworn in on Friday. But I think the last one, we were pushing 50 co-sponsors, but incredibly, all of them Democrats. And when I've talked with a couple Republican members, another one I'm going to revisit next week when I see him in person, and he's one of the ideal ones who should be a co-sponsor of this on the Republican side because he represents a district that has a lot of development stage battery metals projects already done that Biden has mothballed. This is as much a Republican and free market kind of thing as it is anything else. I think it's going to come because as we tell this story, it's going to become more and more evident that within the world and confines in which we live these days, of all of the ways to find for the private sector and for local governments to be able to be the ones to drive the building and rebuilding of infrastructure that's needed, building all of these other things, having job training and trade schools so that we have people that know how to fix an EV or work on one. We have people that know how to be a well site geologist. We have people that understand modern metallurgical techniques and so forth. All of that requires job training and investment. And this National Infrastructure Bank represents a way to do it without the way that's been common in this country for 60 or so years since the last national bank of this kind expired. and that is to just add everything to the national credit card. That's not going to go on forever.
No, and it's a very inefficient way for government to fund projects at the end of the day because you're a city or a county or a state, you have to ask the federal government, please, can I have some money to build this? And then you're at the whim of people who probably don't live in your district or your area to say, yeah, you in fact can have the money to proceed with a project that needs to be done within your own, district, town, community, county. And oftentimes a lot of these things get hog traded and pork barreled in other legislation where somebody wants a vote of somebody else. So, they tap on the funding for their pet project in their district, and that's how these things get funded. And there's no real plan or direction for any of that. So that's the way it's being done. Let's introduce what exactly is an infrastructure bank. Let's go through the basic 101 of it, so people are understanding what the alternative that's being proposed by your policy group.
Well, first off, let me give, and we'll repeat it later, and hope you can have it in the show notes too. But if you go to NIB, which stands for National Infrastructure Bank Coalition.com, you'll get all the bits and pieces of this. This is an initiative that has been crafted by a really impressive array of academics, of public policy people, of people who have been in a conventional banking system, everything from Goldman Sachs to the World Bank to the IMF to local government officials and policymakers who all have come together and said, you know what, we really can dumb this down. This isn't really a hard thing to get your head around when you get right down to it. In fact, I'll throw something in here real quick. I mean, it's not foreign to policymakers, nor should it be foreign to informed citizens, that these kinds of initiatives have come and gone several times in our nation's history. Just in the wake of the Revolutionary War, you had the first and then the second banks of the United States that were set up to they were deemed to be at the time by some, most notably Andy Jackson, is too overly commercial and predatory. So Andy Jackson didn't have any use for them, but they were the ones that enabled the first systems of canals and whatnot to be built in the country. Later, you had, if you jump ahead to the Depression years, you had what was called the Reconstruction Finance Corporation that was actually first set up by Herbert Hoover in his administration, among other things, funded the Hoover Dam, later the Tennessee Valley Authority, and when it was taken over by Roosevelt. But here again, you had the economy in dire straits, and the banking apparatus was set up as more of a public and private partnership, more of the public partnership when it comes to the policy and the apparatus that was set up in the bank, but more so private capital that funded and benefited from this. But later, to the extent that this helped the economy and increased wages, the federal government, through increased tax revenue, they benefit from this as well. So, in modern times, the only thing on the federal level that has come close to the spirit of this kind of thing was when President Obama, fostered the creation for a short time of what he called Build America bonds. And it was, and look, it wasn't the best way to go about it, probably wasn't the right way to go about it, never got any traction to speak of because of poor salesmanship and on his part and everything else. But again, the apparatus was you raise money from the public and sell these Build America bonds, and the money from the Build America bonds goes into infrastructure and that type of thing. But this was one where the one of the flaws of it was that the government, still the federal government, was the one on the hook for this. They were the one enabling this, and we'd have to stand by for it in the end if things didn't go well, which we found out subsequently with Fannie Mae and Freddie Mac. Well, actually, back about that same time, when they were quasi-public but banks set up for public purposes to foster home building and lending and stuff like that, but they got out over their skis. So that brings us to today. The National Infrastructure Bank is something that, if it were to pass both houses of Congress and be signed by the president, would set up the apparatus of a what in many respects is a conventional bank, but a super bank, where the government would set up the policy apparatus and the rules and regulations of this. The bank would raise money in part under the working model of it by having institutions that already are sitting on treasury securities. So, banks, pension funds, and others, they could pledge those securities to the National Infrastructure Bank, get preferred stock in the bank, and a little bit of juice on the upside as different projects are successful. And then the National Infrastructure Bank itself, like all commercial banking operates these days, can multiply that core capital numerous times over, securitize it, and have money to fund different kinds of projects and whatnot, whether through state governments, local governments, or whatever. They need to obviously meet the different criteria. It needs to be for a public purpose or for a public end. Increasingly these days, you're talking about a national security end, where you would start to bring in funding of critical metals projects and things like that under an updated version of this thing. And again, it would be something that would be done off budget. You're not putting trillions of dollars more on the national debt, but you've got a mechanism that in one body is being the most aggressive at channeling loans and investment into places that need it, getting a return for that for the shareholders of the bank, but more so for the federal government's purposes. You're solving two problems. Number one, you're getting these things done and financed way quicker than would ever be done under the federal budgetary process, which I say far quicker, probably non-existent for most of it today, given the debt situation. And on the back end of this thing, when you've got trade schools that would be funded by this as part of the legislation, that would take people that are making $30,000 or $40,000 a year slinging hamburgers or driving a DoorDash. Now they're making $120,000 a year in extractive industries or infrastructure, or electricians, rebuilding our power grid, any number of things. And you just massively broaden the tax base. So the federal government on the back of this thing actually benefits from having a broader, more vibrant economy, broader tax base, way better paying jobs than what we have without it. So any way you want to look at this thing, it's a win-win. If you look at that nibcoalition.com website, they've got lots of information on there about how all of this works, a lot of different forums that they've done, some focusing, for example, on how this could help to fund affordable housing, which continues to be a crying need in this country. We don't have enough affordable housing for people in the lower income levels. High-speed rail, which in parts of the U.S. would be workable and should be employed to cut down on the amount of vehicular traffic on the roads. I mean, there's just so much good that can come from this. And I really think that we're finally at a place where, policy-wise, Republicans and Democrats alike, and people from most, if not all, walks of life already identify a lot of things that we individually need. They're already looking at different individual policies that would help make it happen. But this vehicle is the one where under one roof you would be able to enable and fund everything, unlike what happened in any other scenario.
So let's say we're day one and we've established the National Infrastructure Bank. Bank's got to have capital in order to be able to lend. Where does that capital come from? Does it come from the various levels of government that have to, do they sell back their bonds to the bank to fund? Because, infrastructure typically is done by community bonds or state bonds. Do they sell those to the bank and the bank uses them to, to fund the capital in order to lend more money? Or Where exactly does that capital come from to get the bank up and off the ground so that it can lend money?
Well, first of all, under the present and recent working model of the legislation, and you'll see the actual bill and the legislation if you go to their website, the initial capital for the National Infrastructure Bank itself would come via holders of Treasury securities. You've got institutions in this country that are required to hold Treasury securities as a part of their portfolios for actuarial reasons and whatnot, if they're a pension fund, an insurance company, whatever. To some extent, they can be enabled to lend, or I guess just park, it might be the better word, those treasury securities that would in turn provide the initial capital and lending authority for the infrastructure bank itself. And the parties that put those bonds in the infrastructure bank would receive stock in the infrastructure bank. Secondly, the infrastructure bank, as have other public banks in the past, would be authorized similarly to the way banks, commercial banks work today in every context. With every $1 of deposit, they are allowed by statute and whatnot to create several dollars worth of lending authority. That creates new credit, new capital that goes into the marketplace. They would be limited so that you didn't run in, theoretically at least, into trouble of everybody getting over their skis. This is what happened to Fannie Mae and Freddie Mac in the recent past, where they got out over their skis. So you'd have to keep a reasonable limit on the amount of lending authority and multiplication of that capital base that they could do. But that is where the bank itself would get the capital to lend. The current legislation contemplates that application would be made to the National Infrastructure Bank by state or local governments that have a project they need to fund, and rather than go out and pay what would likely be, as for starters, higher market rates to go to the public capital markets to fund infrastructure, and then the state is directly on the hook to the bondholders for that. They borrow money at a lower interest cost from the National Infrastructure Bank to do that same thing. And then later on, their debt is to the National Infrastructure Bank rather than to bondholders. So that's part of the initial food chain of how that works. I don't know that when this thing is reintroduced, as it inevitably will be soon in the new Congress, what changes are going to be made. I've heard of several new potential changes, but the main structure is going to be the same. I think they're going to look to boost the lending authority, because $5 trillion for all of our infrastructure and metals and everything needs probably isn't enough, probably wasn't enough when this thing was first proposed, let alone now. And, for context, keep in mind that in pretty much one whack of a policy decision, the U.S. government added $7 trillion to the debt over COVID, just throwing money out there and telling people to stay home, and got no productive use out of that debt. Now you're going to have a situation where the government doesn't go directly further into debt, but enables a bank to do something a whole hell of a lot more productive than that.
So this is different than, say, a commercial bank where, you and I have our deposits in a bank and you're taking, we come out of Christmas and, you've got Jimmy Stewart, your money's in Fred's house and Joe's house. It's not like that. You and I aren't going to be depositors in this. It'll be other banks would be depositors in this bank.
Yeah, look, commercial banking does not work like the Bailey Brothers Savings and Loan, nor a typical credit union even these days. Fractional reserve banking is our way of life. That's a whole different discussion whether it should or shouldn't be, but it is. And the way in which credit comes into being is based first and foremost, as you well know, on the Federal Reserve and other central banks, but then by replicating their ability to basically create money based on different reserve ratios and requirements. Local commercial banks can do the same thing. So if you and I deposit $1,000 in a commercial bank, that commercial bank can loan 30 based on that. That's just the way the regulations are. They can multiply money beyond their deposit base and lend that money out in the form of new loans, which, theoretically and in turn helps to, circulate through the economy, create growth, create wages, create higher taxes, blah, 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 and gives everybody the ability to pay back interest. I don't want to get too far in the weeds on that. As I said earlier, in the case of the National Infrastructure Bank, while the mechanics are largely the same, there would be more constraints on them than there would be on a typical commercial bank. They would have a certain limit beyond which they could not securitize or multiply the deposits, et cetera. So again, and there's a lot of moving parts to this. I'm trying to give people the high level view. And for people that really want to roll up their sleeves, there's a lot you'll learn by going to their site, nibcoalition.com. But within the context of the world in which we live, this is the single best way, in my opinion, of anything I've seen to get all of these infrastructure needs and onshoring, resource nationalism, power grid, transportation, everything that we need, or a lot of it, can be done through this source. And again, in a context where doing anything remotely close to what we need to have done, if, President Trump and the Congress were of a mind to try and do it through the budget process, isn't going to happen. I'm telling people right now, frankly, Mike, that the president, by the middle of the year, is going to see that a good part of his agenda has not been passed and can't be, because part of the math I'm trying to educate people on, just to divert back to this for a second, the math does not give him majorities in either the House or the Senate. On paper, the Republicans control the House and the Senate both, but you're already getting radically different stories out of both the House and the Senate as to what they think is doable in their body. When the president, as we're recording this on the 7th of January, says, well, I want one big, beautiful bill. They're trying to use what's called a reconciliation process. And if they can ram through both the House and the Senate one package that pretty much every single Republican but one or two in the House will agree on, and every single senator except for three Republicans in the Senate will agree on, which would make the Vice President Vance the tiebreaker. Those bills are not the same in either body right now, and they're not going to be. So you've already had the House Speaker push back the timetable. You've already had the Senate Majority Leader warn that this isn't going to happen in one bill, it's going to happen in two, which means after they pass the first one, whatever that contains, the second one isn't going to pass at all. So this is not going to be easy. And again, this is why both parties, and an advantage here is that this has already got overwhelming Democrat support. It should have overwhelming Republican support, and that's part of my job, is to make sure that we add Republicans to this. This is something that will be less contentious by and large than a lot of stuff that's being talked about. Not the least of the reasons being is that this is not going to directly add to the federal deficit. So again, this is why, and there's a backstory to this that we won't go into right now, but it's astonishing to me. And when I've talked to a couple of Republican members, it's like, well, why hasn't our conference gotten onto this? Damn good question, because you would look at this and how it's set up, and this is much more Republican initiative than it is a Democrat one. But that said, those who were carrying water for this long before I came on board, that are academics and, again, former people with the World Bank, the IMF, Goldman Sachs, public policy people, academics, economists, et cetera. The last thing anybody wants to paint this as is either it's a Republican or a Democrat issue. This is an American issue. This is something where, people generally agree that we've got these needs in this country. There's been disagreement till now on how to properly fund it, how to prioritize things like that. And this is something I believe deep down, if everybody understood this, would be wholeheartedly embraced, including by the public.
Yeah, well, the more you talk about it, the more I see a lot of benefits to this. Like, as you say, you don't have to fund infrastructure projects using federal debt. Because the bank is making the funding decision, it takes away partisanship out of those decisions. it doesn't matter who your constituent or what state it is. It's all about the business case that you put forward, that this is a good investment for the bank to make to lend you the money and that they're going to get their money back. So I would think that that would take care of some of those bizarre, and I'm using air quotes for those that can't see, infrastructure projects such as, the mayor of Podunk, Missouri wants to put a gazebo in a park to commemorate his dead dog. I'm being facetious, but a lot of these infrastructure deals are littered with exactly
Oh, there's dopier
things
stuff
like
than
that all across the country. And I got to think that this bank, if it became a reality, would go no to those projects and yes to projects that are going to provide actual employment and economic growth.
Well, that's exactly right. And that's one of the many reasons why this is a far superior vehicle to get serious about, to do the things we need as a country. Again, when it comes to all these different infrastructure related, national security, all these needs, you put them all into one really big package, in my view. And it's because it's a far more efficient way, certainly when you compare it to what the federal government has a history of doing, whether under Republicans or Democrats, frankly, where the money is spent the least efficiently. There's no accountability, and it just adds to the debt. And that's just not going to fly anymore, again, as a matter of simple math. I think that people who we're going to be approaching anew here, now that we've got the 119th Congress sworn in, Republicans and Democrats alike, is that you better look and take very seriously at the message that the U.S. Treasury market is sending you right now. Today, as we're recording this, we had yet another new spurt to new highs for this rebound in long-term U.S. interest rates. We were pushing 4.7% on a 10-year Treasury, which is a bellwether this way. We're a handful of basis points away from a 5% even on the 30-year Treasury bond. China, by contrast, to borrow money for 10 years has to pay 1.6%, not 4.7%. That's a story in and of itself that we've talked about and will continue to talk about. The bond market is simply not going to allow further deficit spending without exacting on the part of the bond market vigilantes, who are as full-throated now as they've been in over 40 years. They're not going to allow this to happen without exacting a bigger and bigger price for this. And in one sense, as evidenced by the strength of the US dollar and the US stock market in the recent past, the US market is still the prettiest horse in the glue factory globally. The sheer math of the sheer volume of funding requirements on the part of the federal government is going to continue to push yields higher still. And that's going to be only more so as the Trump tax cuts are extended without any seeming way to counter that and pay for them. Sure, there's going to be the whole Doge effort, which I'm 110% behind Elon Musk and Vivek Ramaswamy and Ron Paul, who's there for a little bit of window dressing. But I'm not holding my breath that anything meaningful is done that's going to truly move the needle as far as reducing the bloated federal government and how much money it burns through. So this is the one way in which the most transformative economic things that the president, and this is just it, the president already wants and says he wants what this bank will enable. Most congressmen and senators already want or say they want what this bank will enable and make happen without having to have a fight over how much it adds to the deficit. This really, if these people all sit down, you put it in front of them, this is not a hard sell, or sure as hell shouldn't be.
Well, I would think that the Doge people should actually get behind this because right now there's a number of infrastructure initiatives that have funding attached to them that aren't getting done. If they were to cancel those and put them back through this bank, a lot of that federal money wouldn't need to be spent, and Doge would be achieving some of their goals of reducing the deficit, unless, of course, they decide to use the unfunded infrastructure programs to fund the infrastructure bank, I guess.
Well, look, right now, and this has been well covered in our press, and it's not unique to Biden, though he's been more outlandish about it than most presidents are. But every penny that has been appropriated, not already spent, and this is just the culture in Washington. If you don't spend it, then you've got a lower benchmark next time there's budget discussions in Congress as to how much money it needs. So it's part of the culture that all of these different agencies that have had money appropriated, but they haven't spent it yet for one reason or another, they're finding everything that you can imagine as things you can't imagine to blow it on in the next 13 days before Trump and the Republicans come in. That's just the way things work, regrettably. But again, in any case, this is not a vehicle as constituted that is going to take overt direct investment to help seed it, at least from straight from the federal government. Not that it couldn't happen that way, but it's not designed to do that as of right now. As of right now, the bank's initial capital will have as its foundation Treasury securities already issued, already owned in the private sector that owned by individuals, owned by high net worth people, owned more so by pension funds, insurance companies, whoever, that get put into this thing, and then that money is leveraged and securitized, and as part of the typical banking process, is multiplied into a much larger amount of lending authority, and that's how the lending will come into state and local governments, infrastructure projects, whatever.
So we've talked about the bank and its benefits. It takes away partisanship. It removes infrastructure from the federal deficit. It speeds up the process to get projects funded because you don't have to go back through Congress and that. It puts the decision making back to a local level, be it the county, the city, the state. Let's talk about the county, the city, and the state then. So let's say randomly St. Augustine, where you live, has an infrastructure. They want to build a new state school to increase coding for AI, as an example. Let's deal with a potentially good project that should be funded. How would the city of St. Augustine and the county that you're in, or the state of Florida, apply to the National Infrastructure Bank in order to get the funds needed to build this college?
Well, by and large, I suspect that as far as the mechanics, to talk about the mechanics first, that might not be unlike what states and local governments do right now, to go to the government when there's grant money available or highway money available or this or that. There has to be some justification as far as a public need and whatnot for that on the local level. I can't speak to the specifics of, in practice, how it would specifically work with the National Infrastructure Bank. My general understanding of it is that just as there would be parameters in which the bank could create credit and lend, likewise, there are going to be parameters as to what things can be funded. And the good part of it, very different from a lot of current practices, is that since these aren't grants to state and local governments, or just money that is, quote, loaned by the federal government, but then later forgiven, increasing the deficit. This is a commercial transaction, and it's got to have some use, and it's got to be expected to generate an economic return, both for the local entity involved and for the national economy generally. And then it's going to be, paid back. So the whole vetting process itself, because there is accountability, on how the money is used, and there is an expectation that it be repaid, albeit at low, below market interest rates compared to, as I said a few minutes ago, in the case of a state government, the state government in most cases, sure as hell, sure, certainly if it's Illinois or someone like that, they're not going to pay to the National Infrastructure Bank for a worthwhile project the amount of interest that they're going to have to pay to the bond market if they want to go out and raise a general obligation bond or something like that. So, there's a lot of nuances, Mike, obviously still to be worked out. The mechanics by which other parties would be involved, not just state and local governments, if it's for a particular need. I mean, like right now, for example, the federal government, through both the Energy Department and the Defense Department mainly, has had in place for a while. This started under Trump, it accelerated under Biden through some of the IRA provisions and whatnot. There's combinations of loans and grants being made to extractive companies that have got an important quantity of tungsten, for example, or of antimony, potentially, and certain other things. That's all good, but I think it can be done better through an infrastructure bank. The question is, will the infrastructure bank be able to lend money to XYZ, a private company, rather than being isolated just to, governmental entities? I would suspect, and I'm maybe speaking out of school here, I don't tend to, but I would suspect that especially as this thing gets chewed over more, hopefully, in the not too distant future, and Congress critters are looking at the different provisions of this, the discussion I'm sure is going to be had of where do we draw the line as far as who is able to apply? Are we going to use a national infrastructure bank to make loans to outfits instead of the federal government doing it directly via the Energy Department, say, or via the Defense Department? Those are a lot of questions I think that are still to be answered. The simpler version of the legislation as it's existed to this point would not contemplate loaning money to private entities, but this is evolving as the price tag of this is going to be evolving and other things are. So we'll see. And again, I hope I'm not speaking out of school, but a lot of the give and take that's going to come as more and more members of Congress, hopefully, and senators get involved, as the White House gets engaged, which I'm working on as well. These are questions that are going to come up, and hopefully not to the extent of watering down or killing an idea which, as it already exists, is something that's desperately needed. If it needs to be tweaked, fine. But the apparatus of this infrastructure bank, I think, is something that is worthwhile and that needs to be built upon.
Last question I have for all of this is that let's compare it to a mortgage company. A mortgage company will take and bundle up a bunch of mortgages and sell it to other lenders. Does the National Infrastructure Bank have the ability to bundle up its loans and sell it to other lenders as well?
Not to my knowledge, no. And as I alluded to earlier, I couldn't give you the exact facts and figures are not in front of me, but I do know that compared to a typical commercial bank that deals with all matter of personal business and other loans to the public, this would be a bit more limited as far as its ability to multiply deposits. And I don't know of any provision that would be allowable as it exists to be able to do that kind of packaging of things.
And this has to be new infrastructure, I take it. So, for example, where the barge hit the bridge in Baltimore, you wouldn't go to the infrastructure bank to fund the replacement bridge that needs to be repaired, even though it's infrastructure.
I don't know that that would necessarily be the case, Mike. I couldn't give you a final answer to that question. It's interesting, though. I'm going to have to ask myself of the brain trust, but I don't know that there would be any distinction so much between new infrastructure and repairing dated or old infrastructure. I think it's more a question of judging the economic and public policy needs and benefits.
It would seem to me that you could take a group such as FEMA as an example and use the infrastructure bank as almost like an insurance policy. So instead of funding FEMA, you fund the infrastructure bank and they provide the funds in the case of a disaster.
Well, that's not presently contemplated in the legislation. Doesn't mean it might not come to that. And it sure is a tantalizing idea when you look at the gross mismanagement of FEMA with its budget, as we've seen just in the last year, let alone other federal government agencies. And again, it's good to sum up this discussion kind of back where we started. The worst way to fund any of these public needs that we're talking about, which inevitably lead to better ways of life, more efficiency, a broader based economy, broader based wages for more people, all of this stuff. The least efficient way to do it is through FEMA or government agencies or through the typical budget process that we've all come to be used to, unfortunately, in our lifetimes. Of it just gets added to the never-ending national credit card until all of a sudden the costs get too high or the credit starts to run out. You know, we're not there yet as a country, but it's getting pretty dicey. And again, when I talked about, the Treasury market recently giving all of these people a shot across the bow as to what's doable, to me, the behavior of the bond market alone compels people to look at this initiative seriously because it's less likely today than it was 6 months ago or a year ago or longer that the federal government, through the typical budgetary process, is going to be able to do any of this with what the market straitjackets are going to be, imposing on them.
Yeah, definitely. So if people want to continue to follow this initiative, nothing obviously can be, or at least much can be done until the new administration is fully into place on the 20th of January. How would they follow the initiative?
Well, again, the best way to do it is go to the website for the National Infrastructure Bank Coalition. So it's nibcoalition.com. A lot of good stuff there, not overly complicated. So I would encourage people to go and look at that. This is something, by the way, a lot of countries already have on this planet infrastructure banks, but in most cases, with the exception of China, they've done little or nothing with them, including Canada, which has got an infrastructure bank. This country doesn't, and it should have one, and this is a great model for it. Will there be modifications or whatnot to it? Possibly, but the basic structure, the basic idea, it's a proven vehicle numerous times in U.S. history, number one, and number two, it's something that, again, given the dynamics today of the national debt, which is ever growing, and the bond market already in rebellion somewhat against the idea of higher deficits and higher inflation still through business as usual. This is something where, again, quite honestly, if this initiative is not embraced by Congress and signed by the president and acted upon and implemented, very little of substance is going to get done that's going to help our economy. And that comes to, again, the long promise that Trump himself made in his first term, as you pointed out, of building and rebuilding infrastructure that's badly needed. If you look up the American Society of Civil Engineers, which give a report card every so often to the U.S. of A., it's not an encouraging passing grade when you look at what they say are the many, many, many trillions of dollars of needs out there that we can't account for. Our power grid, which is extremely vulnerable and outdated in most parts of the country. There's so many things. And it's going to take massive amounts of money way beyond the ability of the government to fund it through debt, but where you still need the policy impulse and imperative of the government, but to set up the apparatus to truly let the market more so and existing capital off the books of the federal budget do the job. again, I don't know how much better an idea anybody could possibly come up with for what we need.
Here, here. And as you like to say, you're around to call balls and strikes, and you're very pragmatic as to policy and the economy. If people want to follow your work, how do they do so?
Well, just go to nationalinvestor.com. There's a lot of stuff I've talked about recently, broad policy issues. I'll be continuing to talk about these things in the weeks and months ahead because look, you and I have talked about this before. Whatever you think about as policies, good, bad, or indifferent, the mathematics of the situation are, or is, I don't know which word to use, that Donald Trump is taking office for the second time in as bad a place or worse as Jimmy Carter was in 1976 and as Bill Clinton was in a different context in 1992, where the bond market and the dynamics of the national debt are going to really be driving the bus. And it's not a good situation for a guy who thinks he's the king of debt and the smartest guy ever put on this planet to manage debt. I got news for him. It ain't going to work.
Yeah, I hear that, but when you put it that way, I have less fear of him trying to buy Canada than I did a week ago. So
No, don't worry. Don't worry about the president buying Canada. Don't, listen, I have said, and like you said at the outset, the prime minister has found the most painful, lingering, and screwed up way possible to leave the stage. So it's going to keep your country regrettably in flux on a whole lot of things for a good part of 2025. So that's a shame. But once this is finally done and this sad chapter of Canada's history is behind it, and looking at this ever increasing need the planet over, let alone in our own North American backyard, for commodities of all kinds, for skilled labor tied to them, et cetera, I think in 10 years, the loonie will be more strong than the US dollar, is reflective of a better governance structure up there. And in recognition of the mineral and energy wealth, which proportionately is far greater in Canada than it is in the US. And whoever the prime minister is at that time might be talking about annexing the US.
well, we say up here, we're bigger and we're on top. So guess what that makes you?
Right.
Until we talk again next, and we're going to follow this infrastructure bank story because it's a very intriguing idea and it solves an awful lot of problems going forward. So we'll see how that progresses. But it's been good talking about this. Thanks, Chris.
Yeah, it's important. And it's something that, again, if this doesn't get done, I mean, Trump's got a lot of the deck stacked against him now. And if they don't embrace something like this, if he doesn't make something like this happen, it's not going to be a pretty, forget 4 years. It's not going to be pretty after 2 years.
I hear that. Thanks.
Take care.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.